Welcome back, ladies and gentlemen, to our Breakaway Session 5 on Reinventing Microfinance Product Diversification and Lending Models. Ladies and gentlemen, this session will address the current products offered by MFIs and how important is the product diversification in MFIs to broaden their outreach and improve risk management. As MFIs evolve, there is a growing recognition that a diverse product portfolio not only meets the varied needs of the clients, but also strengthens institutional resilience. Ladies and gentlemen, with those words, may I request you to kindly join me as I invite our distinguished panelists of the session. May I invite moderator of the session, banking editor, money controls, Ms. Hamsini Karthik, to kindly join us onto the stage. Warm welcome to you, ma'am. May I also request MD and CEO Unity Bank, Mr. Inderjit Camotra, to join us onto the stage. I request founder and vice chairman Aavishkaar Group, Mr. Vineet Chandra, to kindly join us on the stage. I extend a heartiest welcome to Managing Director, Midland Microfin, Mr. Amardeep Singh Samra. Warm welcome to you, sir. I also invite on stage MD and CEO Dvara, KGFS, Mr. Murty, to join us onto the stage. I now extend a heartiest welcome to co-founder and MD, UC Inclusive Credit, Mr. Abhijit to join us onto the stage. Ladies and gentlemen, this session will also highlight the role of innovation and technology in facilitating product diversification and improving customer experience. With that thought, may I now request the moderator of the session, Ms. Hamsini Karthik, to kindly take over. Over to you, ma'am.
Am I audible? No. Okay. Yeah. I'm audible now? I'm good? Yeah, cool. So it's a really wonderful time to be talking about all the evolution in the banking sector and how do we diversify products, etc. But we'll start with what is sort of top of the mind for most of the MFI practitioners. How do you sort of get over the perception that is getting built around microfinance? Today, it's not the most wanted word. Whether we talk of it from banks wanting to lend to these segment, or the way the government is perceiving it. Yesterday we had the DFS secretary say that it's becoming an inefficient model. So how do you want to really break this perception around microfinance? I'll start with you, Inder.
Thank you, Hamsini. Always good to be on a panel with you. Hi. This is the session just before the lunch, so we'll try and keep it interesting. I remember last year at Sa-Dhan when I was on this stage, the state of affairs was panic, absolute panic. What has happened? Which way has microfinance gone? But today, very heartening that we are sitting together. We're sitting together.
No, it's...
We are all sitting together, not in a state of panic, but for strategic discussions of how do we salvage, how do we reinvigorate, and how do we bring this MFI segment to the glorious standing which it had. India has been the poster country in the world. Yes, started by Bangladesh. We are the country which empowered the 9 crore women by giving these micro loans called MFIs. I heard the previous panel, they want to call it the nano loans. But see, what is 9 crore women? An average family of 4 is 36 crores. That's 1/4 of India's population. That's the amount this microfinance industry has reached out to and benefited. It benefited itself, it benefited the woman and her family at the grassroots. Hamsini, what has happened is the industry has been through several shocks, and the shocks have been coming more often. Way back 2005, we had the Andhra shock.
Yeah, we'll delve deep into the shock factor of it a little later. That's a different subsegment by itself. But on the image perspective, I'll toss it back to you, Vineet. You probably would be the common name among most of the MFIs and SFBs today, as a very important pillar building out the MFI sector through your investments. How do you sort of reorient this image issue that the sector is going through?
First, thanks for having me here to the organizers. But I think I first time heard about microfinance in 1998 when my mentor Vijay Mahajan introduced me to the concepts a long back. And I have been a reasonably active player since 2001, so I've been around for long and been part of every up, down. In 2001, there was no money and a lot of people who are demanding money. In 2025, we discovered there's a lot of money and we are struggling to find people who actually can take that money sustainably, and that's really the change.
Right.
And in between, we have gone through these cycles multiple times. So I think sufficient to say that what we have learned very deeply. So microfinance as a outreach to women, depending and taking the women out to empower them, to provide them capital. We have learned that part quite well and done it at scale. But we continue to, as a collective, create failures after failures. Could be in how we engage with politics, could be how we engage with regulator, could be how we engage with each other, and probably our own understanding of how the client's aspirations are changing. So as I keep saying, in 2001, we had a multiple bottom of the pyramids. In 2025, the pyramid of aspiration is flat. It doesn't matter what my son or my daughter wants. The child of the woman who borrows from us has the same aspiration because they see the same TV, same phone, same accesses.
Absolutely, absolutely.
We continue to aspire to fill these aspirations with the resources that we designed in 90s or 80s or 2000. So I think that's really the challenge, and that challenge has been transformed into perceptions. And that perception is carried, so the government sees us as inefficient when you happen to be the most efficient deliverer of capital in microfinance across the globe. You can check it. In 2006, right in this hotel, Microfinance Management Institute and I think there was this presentation made by World Bank right here in this hall saying India's microfinance is world's most efficient microfinance. I'm talking about 20 years back.
Yes.
We cannot become inefficient. So we continue to remain efficient worldwide, but are seen and perceived as inefficient by our own system. And I think our inability to communicate and continuously being apologetic about who we are is basically, you have created jobs where government is struggling to create jobs. You have created livelihoods where everybody struggles to do it. You have taken capital where the financial system on its own could not do it. But we do not take claim. We actually keep apologizing for few things that will happen. Will you stop manufacturing cars because there are accidents on the road? Answer is no. No car manufacturer actually stands up and says, so I'm sorry, 20 accidents happened with my car. I will stop manufacturing my car. But microfinance apologists continue to claim that microfinance is unredeemable and is bad. So I think it's more a collective here which has a problem. And because we are apologists, we continue to communicate that image, and that perception sticks with us.
Abhijit, do you agree with him? If he was a very important equity player, you were a very important debt player as well. So do you agree with him, and how do you believe that this can be overcome over time?
Yeah, thank you, the organizers, for inviting me here. I think being a practitioner on the ground, not as a direct operator on the ground, but an, a part of SIDBI and then United Capital and UC Inclusive, we have been supporting this sector for long. So I think Vineet put it really nicely in terms of how we are being perceived and how we are rather being cornered over a period of time. I'm using the word very judiciously cornered because think of how many NBFCs has gone down the drain in the last, NBFC MFI, in the last 30 years of our existence almost, right? And I'm been in this space from 1996 onward, where I first supported a small NGO and then went on to look at different type of NBFC, whether it's raising capital or you know, working with them on the funding side. So I think a few things to keep in mind very clearly is, one, we demonstrated beyond, you know, any other country that our repayment rates are the best in the world, best. As Vineet said, very, you know, the operational efficiency. No microfinance in the world operates at this pricing. No.
Sure.
Today also, if you go to Philippines, it's at you know, about 66% rate, right? So forget about Latin America; those are in a different league altogether. So I think few things to also think about that. Why private sector came in? Because government thought it's very important. We have to give credit to this sector. So when we think that sector is so important, as a group, as a industry which has not even written off overall 1% of the entire disbursement over so many years, why cannot we do certain things slightly differently? And here I'm, you know, it's a ask or it's a request or it's a few points for the entire community in terms of the regulators, in terms of the lenders, in terms of the sector leaders. Not only I'm talking of operators. Let's look at the role played SIDBI at early days, right? How much of effort has gone into building? Let's look at the role played by NABARD in terms of the SAG movement, what we have done, right? Now, today, I don't think any national level institution is taking up the cause, right? Yes. And when we know it's so important, it's so critical, right? And see, there are a lot of other things. We are talking of client, we are talking of their protection, we are thinking of our portfolio. But again, last year also we discussed this is, where do we miss out on the client? Are we thinking about them? I mean, think of it, earlier we said that poor are not bankable 20, 25 years back. Now we have proven beyond doubt they are bankable. But we are giving up products what we think is right. You know, we were discussing with Murty and we said 5,000 became 30,000 the first product over the last 20 years. But we have changed it from a weekly to a fortnightly to a monthly model, right? We have not gone to think about that. Earlier what we used to take as saving, a most critical component. World Bank defines, you know, microfinance as credit, savings and insurance. We have forgotten savings, completely out of the picture, except for banks which take a bit of funding, bit of those savings. We have forgotten it. And it's so important and critical for the client as much as also from our risk perspective. Like, you know, many of the regulated NBFC today who are not microfinance take security deposit. Doesn't they take security deposit from us? They take 10%, right? And they keep the money with them. And as such, they are not deposit taking, but they give an interest. I mean, why cannot we think of something from that perspective also and say that we have to think beyond. We are just going by regulation in a certain manner. And also we have to, as a think tank, as a group of leaders, we all have to come together and see what tweaking we need to do. As we are always on back foot, as Vineet said, we are always trying to fight the odds out. Why? There are a lot of data to say that we have done well. We have done well over the years. So let's bring small things, like can we make it as a saving product, as an integral component? We are today talking of 60% microfinance and 40. I mean, we can still do at a 75-25. Not that we have to give everything to the same client. Rather, see that how do we retain those clients. I mean, one of the points I was discussing a few minutes back with our colleagues there in the discussion room is now, see, we talk of 3 lakhs and we talk of the indebtedness, right? When we talk of indebtedness, it's in the microfinance to prove that 3 lakhs as the income and the EMI should not go beyond what, 12,500, whatever. But when a secured lender comes and lends, same client, are they bound by these guidelines? No, no. So I think somewhere we'll have to think what we need to fight here and represent the institution saying that if certain things are applicable and we are being treated in a different manner because we are reaching out to the unbanked, we have to think of what are the other things around that. Of course, as we go into the discussion,
yes.
I'll come back
Abhijit,
to the other point.
I'll just interrupt you right there and I'll come to Murty on this. Murty, Inder made a very valid point on cycles. You are also somebody who's seen multiple cycles. Some of those cycles were, I mean, some of your P&L was hit to a large extent by some of the cycles caused by MFI issues itself. Is cycles becoming the big, unknown for you to factor into your balance sheet P&L right now? And how do you work around it? Can you even work around it in a logical manner?
I think I will, thanks for inviting me first, but I will also answer this question to the question that you asked, why is the perception so bad? I think the perception for the external world for this, towards this industry is bad because the resilience of this industry is pretty good. When you said that cycles which were 10 years, that AP, we just spoke, AP crisis happened, I don't think any other similar kind of crisis to happen would probably take 10 to 15 years. Floods which used to come once in 5 years, today every year there is a flood, some issue or the other. But you look at in the last 25 years, I think the way this industry bounced back is where the internal risk frameworks of every institution probably have worked upon to basically see that we know for sure that let's not wait for another 5 years. We know that next month, tomorrow what will happen is something I'm not sure. So we have to be ready for what happens tomorrow. I'm blind till the end of the day that what was the demand today, then what is it that I would collect. But having said that, I think perception is self-created by the institution itself in terms of how do you present yourself in a packaged way. So the question every time you go to any forum, regulator, lender, rating agencies, they would say, microfinance institution, very high cost of lending.
Very high cost.
Now, can we break it? I don't think it's costly. For example, if it's a 2-year loan which is 24% charge, it's not 24% flat, it is 24% diminution. So if you break it into 12 months, it would probably be around 13.45 kind of a thing on a flat. And what is the rate at which you are getting personal loans today?
Much higher.
The second thing is if you default, credit cards, we all in this room have credit cards and the kind of charges that credit card companies put, that is as high as 76%. Now, did anybody speak about credit card industry? No. I think it is over here that how do you present. And coming to the question of cyclical change, I think we have got immune that we know for sure that we are not sure how tomorrow would be, that you are actually taking care of it. While it's a treadmill.
Sure.
We are running on a treadmill, not knowing what would happen. We can't just stop it. I think we have got used to these cyclical changes. But in the process, what has happened is that I think institutions have also become pretty good in terms of their internal risk frameworks.
Amardeep, would you want to take that question forward? How are you building your business around cyclicality, and how important is shielding against cyclicality becoming for you?
Yeah, certainly. First of all, thanks, Sa-Dhan, for having me at a very, very crucial topic of discussion. Last year also I was here discussing about new regulations. I'll try to put into perspective everything what Hamsini said, what cyclical changes. I'll try to put everything together around the topic of today's discussion. See, last 15 years of me being into this business, I've seen cycles, and now people say, everybody is saying this cycle is self-inflicted. So one of the reasons, I'll not go into all reasons of over-leveraging, etc., no. One of the reasons of we not being able to diversify, innovate, was that we were doing 75% household income-based, typical MFI lending. We were not able to, see where the customers are evolving, where the products are evolving. We were not able to do that. Coming to the RBI regulations, RBI has done its part. I must appreciate that they've now given us a platform whereby we can have a diversified book, which will give a lot of confidence to the lenders and stakeholders. But now it is again on us as practitioners. Are we going to go as aggressive as what we were 18 months back? Or are we just going to test waters, gradually move forward? This is how we look at it at our own company. So cyclical susceptibility this sector has. But I must say now going forward, we are going to have a bigger platform to work on. So this is what I personally feel. This is to address your question. I'll be happy to answer.
Sure. I'll come with.
I hope I'm able to address your overall. That was the specific.
Yes. So, Vineet, coming back to you on this question of cyclicality, we've not seen a significant investment by Aavishkaar in the MFI space for a couple of years. Is cyclicality one of the factors, not primarily, but one of the factors that is pushing you back from looking at MFI in the very optimistic manner that you saw 15, 20 years back?
No. I have already incubated and invested in 30 MFIs. I
Yes.
think if I add everything, around 1,75,000 odd crore,
Yes.
we were the first investor. So we don't have a role left. That's actually second. We chose to become an operator after actually being an investor for a long period of time. It has nothing to do with microfinance. In fact, I think today microfinance is a very exciting space for other investors to invest in. But Aavishkar's job was to actually be a pioneer, not be a follower. So we have moved on from microfinance, but continue to play a fairly significant role as an operator. I am irrelevant to this segment. My colleague Manoj Nambiar, so I had a very clear agreement with him that we will back off once our operating side actually takes over. What I personally think is microfinance has proven itself at all levels of commercial capital, that it has the capability and the ability to generate returns. What we have not been able to is we have a very high beta. We are a very volatile asset class. And while I completely agree that the kind of volatility we had in 2001 and 2010 is very different from what we have in 2025, but a lot of this is actually because the leadership within the microfinance sector continue to see opportunity linked to liquidity of the sector.
Absolutely.
So when the banks start lending you fast, everybody starts growing fast. And this has happened in 2005, happened in 2012, 16, 20, 24. And everybody has a right, every sector has a right to make mistakes. But you should learn to make new mistakes. Microfinance is a great sector that keeps repeating the same mistake. You give a lot of liquidity, we'll lend fast, and we'll create the crisis.
Absolutely.
And I think this segment has to learn to stop repeating the mistake. Find new mistakes. I think the regulator will be benign to you, investor will be benign, but don't repeat the mistake that you already know is the wrong one.
Absolutely. That's a very interesting point you made. I'll come to you in there. He was talking about mistakes, but a good, I don't want to use the word mistake, but a good thing that has also happened over the period of time is that migration of borrowers from JLG to individual loans. How do you see the relevance of JLG pan out? I know you're an SFB. Individual loans is more attractive to you versus a JLG, whereas the question would be answered a little differently by Murty and Amardeep. But how are you looking at the relevance of JLG any longer?
Actually, I think JLG has been the bedrock. It has been the mother space for all REs, regulated entities, whether NBFC or banks, to spot the right people to lend to now. I have a lot of people from my team here, Praveen, everyone. We rely on data. We mine data with aggression. We go back to records to see which woman has paid us back correctly, willingly, in time. We go to CRIF and we get data and we scrub it. We go to CRISIL and we find the standing. And then decide which next loan and what type of next loan we'll make to this client base. So, Hamsini, over here, it's not microfinance alone. That ecosystem to which we lend can support multiple kind of products. Our initial data scrubbing records show that the same borrower, 39% of them have taken loans other than MFI. They have taken loans against gold. They have taken home improvement loans. They have taken loans for housing. They have taken micro lab and so many and so forth. We have entered all the spaces I've just mentioned. All these spaces, in the last 2 years, we learned joint liability group cohesion is no longer how we had thought it would be and has become a little frazzled at the ends. But we have not given up on this cohort of people. We still believe the hardworking woman at that edge of the pyramid is still credit-worthy and is worth banking. But this time we will go to her and her family with a different class of products. So actually, it's not she who has to reinvent ourselves. We banks and we NBFCs have to reinvent ourselves.
Perfect. Murty, I'll come to you. Murty and Amardeep on this. I'll come to you to answer. Did the liquidity gush that you all saw, right after COVID, the period between late 21 to 22, which sort of even went in till mid 23, did that tempt you all to, go out and give a lot of loans? Did that spoil the JLG culture a bit from a discipline perspective? Which is putting us today in the point to sort of question the relevance and the importance of JLG. I'd like both of you to pitch in on that.
Yeah. No, I think, see, somewhere we also need to understand as to why is this group culture fading away. I think, I might be wrong, but this is my personal view and my experience as part of my portfolio that COVID came, government came up with restructuring programs. And when you do a restructuring program and 6 months moratorium was there, there were some customers who didn't prefer to take, some who took it. Obviously, there was the group cohesion, the uniformity of the group, homogeneity of the group kind of moved out. That was one. The second thing, post-COVID, just like in urban India, revenge spending was there. I think that was what got caught onto institutions that, growth didn't happen, return of ROAs or something probably that needs to be covered up, that everybody went berserk. The third thing that got added to is 1st of April 2022, RBI came up with a regulation which defined the sector. Now, that was the time also where the qualifying, non-qualifying ratios were changed from 90-10 to 75-25. And you look at it, every other institution said, my future is in micro enterprise loan, which only constitutes 25% of their portfolio when 75% of the portfolio was JLG.
Absolutely.
Okay. Graduation. Now, JLG is a very pre-underwritten product. Sure. Though we run bureau scores, you might have something, but it has to be a woman 18 to 58 or 60, has some business or consumption-based loan, is not delinquent, I am giving a JLG loan. But every institution came up with a program called JLG to EL graduation. Now, while you're graduating, are you doing the same kind of a check in terms of what it was a pre-underwritten to a cash flow based underwriting? I think that is where the gaps.
Is it possible to do the check?
Of course it is. Now, what are you lending on? In JLG, you are lending on to the customer.
Yes.
But when you are doing an enterprise loan, you are lending on to the business. And when you are lending on to the business, you've got to look at the cash flows of the business, not cash flow at the household. Is the business generating enough that it could support? Obviously, cash at the household is an additional bit of comfort factor. I think the urge to grow, the urge to cover up the last 1.5, 2 years of being there, just not doing anything, led to all this. The regulations were very clear that innovation in product should happen. That is what we spoke. But unfortunately, what happened is innovation in products didn't happen, except for that innovation in terms of ticket sizes happened.
True.
Same household which was buying a cattle for 50,000 rupees suddenly had a visibility of 1.5 lakh rupees.
Sure.
But the cattle price didn't go from 50 to 1.5.
Yes.
So what happens to the excess liquidity that the household is sitting on?
Too much money is bad at times. Do you agree with that, Amardeep? Which is what has caused, which is what has led us to, once again asking, are we diversifying enough?
Yeah, going back to 2017, if I just thought about, we are talking about JLG now. I suppose, if I'm not wrong, 8 microfinance institutions, bigger ones, became small finance banks.
Yeah.
They were still holding on to the JLG model. They were like microfinance banks, not banks.
They were not banks.
I mean, again, my personal view, I may be wrong. So too much JLG happened, too much supply happened, not in the last 18 months or so. It started then. Then we saw, we were coming out of demonetization. Then we hit COVID. Social distancing, dilution in the JLG, center meeting model. Eventually, now, at our company, we are seeing about 70 to 75% JLG attendance happening.
Oh, is it? That's good.
Yeah.
That's good.
In the fresh lending, lending which has taken a beating. We have to create sort of a, personal rapport with the customer. They've started paying, there was, one of the reasons of why this sector, again, had a trouble or was in pain was a lot of attrition also happened at the grassroots
That's
level.
true.
We did not have enough people loyal people who, people lost a lot of focus. Maybe you can blame COVID or I don't know what. or maybe India was growing, people were more aspirant to have a, you know, easier white-collar job rather than a job which requires a mobile to go into field with 45 degrees Celsius and a lot of other climatic challenges. So yes, now again, coming to what I see positivity or, you know, light at the end of the tunnel is diversification, gradually testing waters and going forward. JLG model, I still love. In our company, we are not going to say no to JLG model, but we need to evolve. For customers who are entering from informal sort of finance to a formal finance, they, you know, to teach them discipline, to teach them credit, discipline at the grassroots levels with financial literacy, JLG is a beautiful model. But eventually, if they graduate to individual loan, etc., it can be a sort of a launching pad for, you know.
Yeah. One has to go through standard 1 to 12 before that
maybe
stage.
my perspective.
Yeah. Yeah, perfect. I agree with you. Abhijit, I'll come to you next. Is it a high touch point, human dependent industry still? Is that how you foresee it? Is that was the foundation on which MFI was built? And going by what all of them say, I would want to believe that remains the core of this business. Would you agree? And this question is specific to the point that we're now discussing about on the relevance of JLG. Does human touch still make for a lot of business sense for you all?
No, very, very relevant today to rethink. It reminds me of a discussion with Rajiv Bajaj long back on when their scooters were failing because bikes were taking over.
Yes.
And they went on to design the Pulsar, right?
Yes.
And Rajiv told, we were in a event, and he was explaining to the audience that we told that we had to go back to basics, right?
Yes.
But he told his designer that not about back to basic, but the designer was a young guy. He said back to babes, right? Means who is the target group, and we have to align because the bikes are where the young guys mostly do, and the women like to ride that, young girls like to ride that. So what attracts, right? So we have to maybe do a rethinking in this to say what way we can go back and see this entire client base is attractive, and at the same time, we are not missing the main point, which is about financial inclusion, looking at the overall, microfinance and not just a microcredit. So I think one of the things to think about is, I think this is one of the discussions with one of the large lenders at some point. He said, what shall we do now? I said, when was the last time you had a field meeting, right?
Yeah.
Do your once in a year, go back and check. The field guys know you. At least they know who is the MD or CEO, right? So what happened is, I'm not trying to criticize anybody or anything. I'm trying to say that somewhere we are missing out on the basics.
Yes.
So even if the model has reinvented, gone in different directions, like now today digital lenders are coming up and a lot of things are being done. But see, at the end of the day, we have built everything on this client base. So we'll have to see what else needs to be done. Like see simple things, like say today, I mean, if I'm a microfinance client, I have taken a loan, but all of a sudden my daughter needs a phone and I have to go to some other lender. So can we think of a line of credit types with a limit defined that we take only this much and there's an option, like medical emergency. Why do I pay my ambulance or I immediately admit? I have to give money. I have to again go to somebody else.
Exactly.
So, I mean, we are not thinking from a comprehensive approach perhaps, and we'll have to think it that way. So I think client at the center is, we discussed this last year as well. I think somewhere we'll have to go back and think how we again go back and see the client and think of their holistic, right? One of the other thing is small thing I covered a bit in the previous one, but I want to highlight this. See, today if you do a BC or you do a co-lending, all the lenders are asking for an FLDG, isn't it? Why that is being allowed and we as microfinance is not being allowed?
Yes.
And that helps the client. At the end of the day, there's a saving created, there's an investment created. Why can't we do that? I mean, Dvara long back started 100 rupees or whatever as a mutual fund program. Where we are lost. We have not gone back and to the drawing board to think about that. So I think client at the center has to be again thought through and see what else. Of course, we have to protect our risk and everything, those are given, but we have to think about that. As Murty was saying that even in the first group, I mean, we today are not doing GRT properly. Probably we'll have to do it, right?
Absolutely.
So we'll have to think that the value system is inculcated even in our team members. Of course, there's a cost of pricing and everything included. But one of the things we have to think as an industry as well, right? See, great to see that, Vineet and, MSGF and for that matter, Bellwether supported early days MFI. Till COVID, how many investors are there? What is the raw
No.
material for this sector?
No.
What are you doing on the investor front, right? No, not that I'm an investment banker, I'm saying this, but think of it, that's the raw material. You can't get a more loan without equity. But today we don't have equity, so looking at this sector. Right, so we as an industry have to think what else. Think of it, any panel, whether today, most of the conferences, we are not bringing those. I mean, how many investors are here? You will not find even
No, I agree with you, I agree with you.
I have to rethink about
Yes,
that.
I'll toss it back to Murty on that point. I'll come from that side and I'll end it with you on this particular aspect in there because as Abhijit pointed out, today everybody has access to a phone. If a poor woman or if a vegetable vendor who receives payment on GPay today wants to pay for her ambulance, GPay allows you to tap in on a loan instantly. That is going to be a big problem for you all. What is the plan that microfinance as an industry, people like Murty, Amardeep have to counter that issue? Are you thinking through it? I'll start with you, Murty. How do you ensure that your customer, your microfinance customer, does not tap into an emergency loan through her GPay, which is her mode of payment or her mode of receiving money from most of her customers? Is that an issue that which is bothering you right now? Thinking about it.
It's again, adopting technology, being more diversified. I'll give you talk about a product, insurance product, whereby you order medicines or a prescription online. So there are products which we are talking to the companies that if there's a need of, right now, fast commerce cannot deliver medicines, right? Mm-hmm. So on your phone, you give a request, you get a doctor's prescription, then you order medicines. For, if there's a need of an ambulance, right? So that's a emergency. So we can have emergency loans. Why can't we have those? We can have those. But having said that, at the grassroots levels, at this microfinance, bottom of pyramid sector, or at the farmer sector, we cannot phase out money lenders or RTR loans which are there 24/7.
Yes.
So we have to, still, accept that. Eventually, this is what the government of India, in one of the symposiums I've heard from the government communique itself, that we need to, make people shift from maybe 35% odd informal sector to microfinance sector, whereby we are better placed than any banks.
Yes, yes.
PSU banks are becoming bigger and bigger. Their outreach is not going to get more and more, because I was reading an article day before, now they're thinking of merging more banks.
Yes.
So then microfinance sector again is very, very relevant. So this is what we feel. We can evolve, we can add on new products. Why cannot we bring emergency loans?
Murty, you have the flexibility to do that.
No, so see, how do you define emergency?
How do you define emergency?
Precisely. Now, that is one. The second thing is that there are regulations which do not permit me to do emergency loan the way I would probably want or the customer wants.
Sure.
Look at it that I am a customer probably for some genuine reason that I couldn't pay EMI on the due date to a particular institution. But I do have an emergency at household and I come to this institution night or whenever digitally, whatever that. Can I give a loan? If I give a loan, then probably there is every likely chance that some auditor would come and say that, oh, do I really need to should I increase my book by giving an emergency loan, or should I say that it's better that I be on the right side of the thing? That is one. The second thing is that vendors, typically you look at it, in a situation of emergency, it is the turnaround time which matters the most, that I go to the money lender who knows me. No documents filled, nothing filled. It is on the phase that the transaction happens. Whereas over here, KYC, this needs to be done. I need to run a CB check, household exposures, this, that and all. That by the time the customer needs that money and by the time as an institution I'm able to service the customer, there is a big gap.
There is a gap. Yes, yes.
Okay, to the point for where Abhijit made, even find digitization, I think the bigger problem is that customers and households' perception and lifestyles have changed. Have we changed as an institution? We still are talking about center meetings, but we say that my digital collection is 100%. Fine, great. Why are you not understanding that the same customer is doing business somewhere with 3 loans, 3 center meetings in a month to come? Why can't we question the norm? What happened 25, 30 years back when it was a cash economy? People were supposed to bring cash to you at a center meeting. Today, why am I not able to accept and digest that center meeting is coming down?
Yes.
Have I changed? I don't think I'm changing. I'm trying to incentivize the customer, saying that if you come to center meeting greater than 80%, probably next loan I'll give you 2% discount. But why am I not accepting that the customer is genuinely got into a livelihood, doing business? Let her do business.
Sure. Sure.
I will, if I need to understand the customer, I'll understand the customer digitally, let the customer pay digitally.
Sure.
Why should I pressurize the customer? So I think somewhere I don't want to change.
There is
I'm not
resistance.
able to be in sync with the changing environment outside, but I want to be digitally transformed. I think there are gaps in terms of our own thought process.
There
Inder,
is
you're
some dilemma
possibly-
somewhere, yes.
Yes, I agree with you. Among the panelists, you're possibly one of the well-positioned ones who can solve for the problem that Murty has said. You know, how are you doing it? How are you approaching it?
Okay, at the outset, Honorable Secretary DFS, I think was critical because he wants the microfinance industry to be more efficient. It's been long felt that our cost of delivery is high. And all the microfinance people here will agree that the OPEX part is high. It needs to come down. The answer to that, Hamsini, is actually the way banking in the world has gone, and India, especially India, is to become digitized. Is to use all the access available to us to lower the cost of OPEX. My colleagues in inclusive banking at my bank, when we give a loan, we don't even take one wet signature, not even one. It's all on a tab, completely. It's a full digital journey. Where we have not done enough is it a full collection journey digitally also? Not as yet. That is still feet on street, bricks and mortar, and a lot of hard work involved. But digital channels like eNACH, debit accounts, we are now moving that every microfinance woman will have a savings account with my bank. We'll debit their account, that will save us cost. If she doesn't have enough money, she gets a reminder, she funds it, it'll come back to us. The plan is to actually work across the ecosystem. Like I said in the last round, Hamsini, we have to change. The whole world has become digital, especially post-COVID. How can we languish the way we had been earlier with a khata and women sitting on the ground in a quadrangle? It's no longer that way. Sure. We have to digitize, and like Mickey Mehta says, that's how we energize.
That's true. That's true. Let's start with a point on product, and possibly that we'll take that as a last point. The 2 or 3 very important products that you believe is centric for the customer segment you'd want to build to ensure that that customer is yours and that customer is weatherproofed for you.
I'll go easy on this. If we have some recourse to the roof above the head of the customer, we have the customer with us forever. If I can give her a home improvement loan, if I can give her a loan by which she puts a pakka chat on her house, she builds a toilet, she builds a room for her newly married children, she builds a cow shed. If I can manage to give her a home improvement loan of smallest value, and my team wants to give it to her at a much lower price than we would charge a JLG, I think the customer is with you forever. The second is on emergency. Let's see what emergencies and how we defray it. Micro gold loans. Micro gold is like, not everyone has tolas of gold. Some people in the villages have grams of gold. 5 grams of gold still fetches her a 50,000 loan. So a micro gold loan is something which our existing channels can do. And if your journey is digital, you can make it much cheaper. So the idea is to get into her infra space and do cross-selling of products. The oldest mantra banks have known. Cross-sell, do more than one loan, customers with you.
Sure. Vineet, how would you want to look at this whole discussion around products and diversification weatherproofing institution as well as a customer. How are you advising your investment companies on that?
So I think there are enough practitioners here and they're very smart. You just ask any microfinance institution the percentage of other loans. All of them know. There is JLJ loan, then there is individual loan, then there is micro enterprise loan, then there is this loan, that loan. So everybody knows all the banks are there. The key question to ask is, to the same client, a very evolved bank in technology, what kind of diversification do they have? And your answer will be there. It's not easy. It's not easy for a very evolved bank, which is actually doing all those products, to actually have a significant share of alternative products with the same customer. And that therein lies the challenge for microfinance institutions who are in different journeys of their own digitization, to first actually digitize the first path itself. But I think what has also happened is women and their aspirations have changed. So those who are new to loan, probably you should go to 2-3 cycles through JLG, which is a disciplining factor. And those who are coming later, you'll have to transition them to a much higher quality of a product. That higher quality product could be that, okay, I have a track record, you have 3 track record, or you've given back 3 loans, and you have been quite efficient on it. Maybe you shouldn't come to,
sure.
It's not the incentive of actually dropping the price, the incentive of actually releasing the time. Also adding respect, because if we have to be centric to the customer, then customer's comfort has to go up, and customer comfort will go up in case we acknowledge in our product design that the customer, the more respect we give to the customer, the better it becomes. And I think the third thing will be underwriting capabilities. Is going to be a very big call on microfinance institution.
Yes.
And the fourth thing, which I actually believe, and I said, I think 10 years back, I wrote a paper saying, microfinance institutions have been unnecessarily wasting their time looking over their shoulder that the banks will be their competitors. Your competitors will come from fintech side. And
exactly.
It will happen, and it is happening now. It's a reality now.
It is.
10 years back, it looked like a very far-grown reach, because they will raise more capital, and they are willing to lose more capital than you have the capability to lose.
Yes. Yes.
And the fight is going to be of grabbing that space,
exactly.
And then who wins, and therefore consolidation probably is going to be one way. Efficiency in this space has its own questions. We have written enough between 2005 and 12. I see Brijmohanji sitting here, so he'll be smiling. We have discussed efficiency till we can kill it. We are the most efficient deliverers of capital. Try to change it. Large banks have tried it. They have figured it out. It is not as simple as it looks on Excel sheet. So we know the answers. A lot of these answers have already been debated, discussed, and we know those answers. So I won't go there, but I would sufficient to say that the institutions need to realize that the world is changing, and the thought process, the challenge is between the years. The challenge is not on the ground. The women has evolved, the institutions have not. And so this room has bigger challenge than our women, who are essentially basically financing you to grow and scale.
Absolutely. In fact, I mean, that's one point I would like to conclude the whole conversation on. But before we get there, Amardeep, what are the products, taking from Vineet, that you would want to build, which can also possibly be resilient against, digital loans, an earlier point that we were talking about?
See, it's there's a thing which has been talked about, that how do we, keep track of the fintech lending. That is, I don't have a very clear answer to that, honestly.
Sure.
Other than that, house improvement, water sanitation, green products like solar, these are what products we are looking at right now. MSME or even nano in nature, not MSME. Graduating borrowers which were drifting away from us because we were not able to give a bigger ticket or that sort of individual lending. And even, why not two-wheelers? My center officer is not eligible for a two-wheeler loan from any NBFC also, in few pockets which are remotest in nature. So we started a pilot with giving two-wheeler loans to our own center officers. So this is how we are, slowly trying to evolve ourselves towards building some amount of secured book. Yes, I cannot become fintech. I don't want to become fintech. I don't know how to, cater to over leveraging which fintech can create, that's a disruption of the world.
Call it a disruption.
It is. It might create over indebtedness, but it is a disruption.
It is.
It's a very easy access to debt. It's very tempting.
Sure.
And one more thing which I find is again very, very crucial is that over digitization, over in the sense at the grassroots level where customer is still not that financially literate. A lot of cyber crime is happening, which is, very, very serious in nature, and I think we are still getting there, still trying to create awareness. Government is doing its part, RBI is doing its part, but still that is one of the challenges which I really feel is still there. So that is one of the challenges of, getting more over hyper or proactive in digital space at the grassroots levels.
Absolutely. Murty, over to you on this. You possibly started building out, I mean, you don't have the compulsion exactly of 75-25 in terms of microfinance, non-microfinance, and you were among the first ones to use it to your advantage. You took on this journey of diversifying your book with, dairy lending, with gold loans and so on. Where do you see the next scope of, product diversification coming from for yourself and for the sector as such?
See, in my view, the core product continues to be the same, which is lending.
Yes.
The wrappers need to change. And how would you actually change the wrapper with different underwriting norms?
Yes.
And in our view, entry into a household and first relationship with the client, it's always better to be with a JLG, which is pre-underwritten with a lower ticket size.
Yeah.
And as you start understanding the household, the customer and their behavior is when you can graduate the customer to a higher ticket level. Sure. Having said that, in the journey that we look at it, at an institutional level, it is an unsecured product, and entry is a good, JLG is a good, it will continue to be the bread and butter business of the organization, whatever said and done, because it brings efficiency of scale. Group business never, the entire thing was affinity. Now, when was affinity invoked? If affinity was invoked, there wouldn't have been any delinquencies. I think it only brought the efficiency of scale that where I would spend an amount of 1 rupee on one customer, I am able to spend 1 rupee on 5 customers. Cash collection, efficiency of collection. So what we are basically trying to do is continue to be unsecured, over a journey move to a secured, that start with lower ticket size in an unsecured, understand the customer, understand the household, understand the income levels, and move them to a secured product, which could be unsecured higher ticket business loans. Thereafter, you could probably give them a micro lab or a jewel loan. One of the things that I personally feel that everybody has been talking about jewel loan and a gold loan. And when we give to a jewel which is perfectly made, but I feel so many women over here, I'm sure every woman would have a broken jewelry in their house. Yeah. Do we lend to a broken jewel? I think India sits with so much of broken jewel that the capitalization that we could do on that broken jewel. But I think that is where innovation needs to come. I'm not sure whether would regulations allow or not, but I have been really thinking that every woman has broken jewels which they keep it because they don't want to sell it. Why can't I lend it on that?
Yeah, sure.
So
that's an interesting
these are some of the things that we are doing. Obviously, on top of the wrapper would the entire digital piece that would be sitting is that how do I use various AI, ML and all that stuff, which only helps me in terms of bringing efficiency. But I've still not realized what is the cost of the digital transformation and the amount of money that I would actually recover when I'm doing a physical work. But I think that's the way to be, and we are moving towards that.
Perfect. One point that we didn't touch upon at all, and I'll start with that in the closing point, is CGFMU, right? That is becoming what 2 years back people were thinking, is this the way to do business? This increases cost of doing business, and therefore we wouldn't do, has become a mainstream today for microfinance. Whether you're talking about microfinance from a SMB perspective, a bank perspective, or even from an MFI perspective, given that the approach to liabilities has changed quite significantly, and people also want to, securitization is also being thought about from a different prism. Abhijit, how would you think that MFI from an institutional perspective will evolve from here on? Is it going to be a more and more big boys game to play, or do you see smaller players also having a right to win in the sector?
I think for an economy like India, the size of it, the presence of multi-institution will continue because whatever you do today, I think we talked of consolidation that banks are becoming bigger and bigger. The more bigger they are, the more regulatory costs and more their site will move towards higher ticket loans, right? So I think if you see from that perspective, the role of a smaller institution becomes much more critical. Today also cooperative bank exists in different forms, right?
Yes.
Of course, Lab has not been as successful, but whosoever has done, I think, we see Midland Group had, and they did it really well, and KBS Lab was also there. But I think if you look at overall, still we have the packs, many of the packs are doing a great job, like primary agricultural cooperative societies or the district central cooperative banks. Many of them are doing well. It's a question of course, right governance structures and all. So I think the reach is very, very critical and important because banks cannot. Today also, if you look at today, I mean, we made the MFIs SFBs, but the SFBs are dependent on the MFIs again.
MFI business,
right?
yes,
For the reach. So I think the grassroots level institution or at least at a tier 2, tier 3 level city, the presence is very, very important and the regulation plays an important role because the banks will have very strict regulation. So you will need the smaller institution to be there. And then smaller institution will have a niche. I still remember, my boss, Mr. Brijmohan, when he was heading SIDBI those days on the microfinance side, he used to tell that we need to have a national level big institutions and then we should have regional niche players.
Sure.
And I think we cannot shy away from that. We'll have to keep that in mind. Now, that also means that we'll have to think comprehensively. Like, see the effort we are putting in. As Murty was talking about that the client, what else we can do or how we look at whether it's a broken goal or otherwise. Now think of all the hard work. We go there weekly, we go there fortnightly, our field is there. Somebody coming on digital and taking the client away, correct? So what we need to do, like few things. One is that others are taking the security and we are left in the lurch with putting in a lot of effort. Others can do a digital assessment. We are not doing it. Like, why can't we depend on the same set of aggregators or,
Sure.
Yeah, to do that. So we have to think also from that. And last but not the least, I always say, in the last point also, earlier also I said this, that we'll have to think of saving and investment for them. Because banks, always look at comprehensive. Today, when Mr. Vadi was presenting the other day in, I think, one of the events of PE world, and he very clearly said, I'm trying to look at entirely taking the client in. Whatever he needs, I'm there. So the same client, we are putting in so much of effort. How can I ensure that the saving is there, the investment is there? Of course, we are doing insurance and all. So to give a comprehensive service, that way they will not run away to anybody. If there's a problem, the assets are with us, right? And we from our risk perspective, we are lowering the risk. And then the client is much more happy that anything they need is with us. Of course, question could be that you are focused on, putting all the baskets, all the products in, as a risky product. But I think you have to look at the risk in a slightly different manner and see that, can we look at the household? We always talk of household. Look at the household total income. This 3 lakh definition, I mean, none of them are actually at 3 lakhs, right?
They're not.
So we have to think of the investment differently. When you do the bank statement analysis or the GPay or whatever, you get to know where they're spending, what is the income, what is going out. And the same digital guys are doing the same thing. Our same clients, right? Why can't we do that? So we have to think slightly differently there.
Murty, at one point you wanted to be an SFB, but that's still some side away. So how do you see the model evolve? How do you see as a lender, what would be your sweet point? Quickly in 2 minutes, Murty.
No, SFB we wanted, but unfortunately we couldn't become. But having said that, the journey would continue to be an NBFC.
Sure.
Trying to fulfill the needs, the financial needs of the customer. And as an institution, we have always been a multi-product distributor. Way back in 2012-13, we were one of the largest pension fund distributors. We were, doing savings banks, RD, FD for a public sector, a bank. Then we were doing money market mutual fund.
Yes.
Unfortunately, all this stopped because regulations changed. But I think there's so much of unmet demand.
Yes.
If done properly, I think we'll continue to do the lending way and probably see as you got to change as the external environment changes. So at this point of time, it would be an NBFC.
Cool. How are you looking at it, Amardeep? Institutionally, what is the best fit for MFI business?
Honestly, happy being NBFC MFI. I think, to reach out more and more, I think we as NBFC MFI are better placed. Again, coming back to the topic which we've discussed earlier, diversified book going forward, but happy to be NBFC MFI. We
Great.
don't have aspiration to become a bank. We haven't thought about it.
Perfect.
I'm always candid in my thoughts.
Sure. Vineet, this is exactly the line that Manoj ends up taking most of the times. And Manoj says that, there's a strong right to win as an NBFC. Having been an investor of a lot of SFBs yourself, how do you see from an institutional perspective the model evolve?
I personally think that NBFC MFI as a classification may not last very long. Sooner or later, NBFC will be the classification that will be left. We were NBFC, became NBFC MFI. And I think the regulator has started acknowledging that 60-40 has not just fallen from air. There must be some acknowledgement.
Yeah.
An unsecured asset, you just build 85% of it, you're going to collapse at some point of time. So I think NBFC and the banks will remain. Of course, the regulator may want everybody to become a bank, but NBFC is a very important part of the ecosystem. So that's how I see it. That evolution will happen. I think everybody has a right to win. India is a very large country. It's a continent, actually.
Yeah.
We have a big misnomer amongst ourselves. Our niche markets are very large. You can be in one state, you're pretty much like a European country. GDP may not be the same, but the depth is very large. So you can be a significant player. You can build an institution. I think what microfinance institutions should do is build strong governance. That is a classical challenge. The bigger challenge I have noticed is microfinance institutions appoint a lot of independent directors, but do not want their independence. They do not want them to play a very effective role. That's actually a very stupid way to look at it. Independent directors bring you significant value and may actually strengthen you at a very cheap cost. How can I hire a ex-secretary DFS, etc.? We don't have the capability, but they come as independent directors and they can teach you so much more.
That's actually a larger systemic issue also across banks, I'm told. But Inder, would you want to, now that you're an SFB, you have a glide path to become a large bank, a universal bank in a couple of years' time. Would you want to explore that option at some point? Because that means a further reduction to your cost of funds and an ability to go deeper into the market. How do you see that?
Whatever happens, I think MFI will always continue to be a very important part of the bank's DNA.
Mm-hmm.
And it's a natural diversification by itself. It has a high return. It has stickiness. It has all the good things a bank wants. Sure. Currently, we're amidst a cycle where we get a little confused at times. But all cycles, like my colleagues have said, come and the cycles go. The present cycle is going. It will again be a way for MFIs to grow and flourish again. So from our side, we are so happy we are in the space of MFI. We continue to put a lot into technology, into quality of people, and growing, but not only JLG this time, growing different parts of MFI. We are going to the market, going deeper, understanding her needs, her family's needs, and diversifying. As the question of becoming a large bank, yes, Reserve Bank has given us a glide path. And when we meet those criteria, at that stage, we'll talk about it.
Perfect. But on that note, we'll leave it on that optimistic note. He's saying that this cycle is coming to an end, and the session also comes to an end with that optimistic note. Thank you all so much.
Thank you.
Thank you so much, ma'am. Thank you so much, esteemed panelists, for a wonderful session, extremely interesting session. On behalf of the organizing team committee, we thank each one of them. And may I now request Mr. Inigo Arul Selva, who is the CGM DMFI NABARD, to kindly join us onto the stage to present the mementos. May I request Mr. Selvan to kindly present a memento to Mr. Inderjit Camotra. Thank you so much, sir, for sharing your thoughts with us. Thank you once again. A big thank you to Mr. Vineet Chandra Rai. Thank you so much, sir, for joining us this afternoon and sharing your thoughts with us. Our heartfelt gratitude to Mr. Amardeep Singh Samra, Thank you so much, sir, for being with us. We now present a memento to Mr. LVLN Murty. Thank you so much, sir. And we extend a heartfelt gratitude to Mr. Abhijit Ray. Thank you so much, sir. Presenting a memento to Mr. Abhijit Ray. Ladies and gentlemen, a heartfelt gratitude and a huge round of applause for the moderator of the session for wonderfully conducting and concluding the session, Miss Hamsini Karthik. Thank you so much, ma'am, for a wonderful session. May we now request for a group photograph? May I request our panelists to kindly step forward for a photo opportunity. With that, ladies and gentlemen, we come to the concluding point of the Breakaway Session 5 in Hall B, Reinventing Microfinance Product Diversification and Lending Models.